Would you believe if I told you that the third wealthiest man in the world started his journey in a tiny, cramped office with just a secretary? Meet Warren Buffett, a man whose name is synonymous with success. But it wasn't always Wall Street and big bucks for Buffett. His journey began in the heartland of Omaha, Nebraska, with his first investment at the tender age of 11. Buffett's humble beginnings were the foundation for his unparalleled work ethic. He was a man who believed in the power of patience, persistence, and most importantly, partnerships. That was when Charlie Munger entered the scene, a man who would become Buffett's right hand and a key player in the creation of what we now know as Berkshire Hathaway. Despite the modest start, Buffett and Munger built an empire, transforming a struggling textile company into a global conglomerate. And that was just the beginning of what would become a financial powerhouse. From the small office, Berkshire Hathaway began to grow, but not in the way you might think. As the rest of the world was chasing hot stocks and overnight success, Berkshire Hathaway was playing a different game, a long game. The strategy was simple but not easy. Focus on undervalued companies with a strong business model. Consider the case of Geico. When most saw a struggling insurance company, Berkshire Hathaway saw an opportunity. They saw a company with a unique direct selling model that had the potential to disrupt the entire industry. They saw a diamond in the rough. And so, in 1996, they made their move, purchasing the company outright. But it didn't stop there. Berkshire Hathaway continued to identify and invest in undervalued gems. They looked to sectors overlooked by others, like the railway industry. While others were focused on tech stocks and the latest Silicon Valley startups, Berkshire Hathaway was investing in the Burlington Northern Santa Fe Railway. They saw past the smoke and steam to the intricate network of tracks that spanned the continent, a network that was essential for transporting goods across the country. And then there's Precision Cast Parts, a manufacturer of complex metal components and products. Not exactly a glamorous business, but Berkshire Hathaway saw something else. They saw a company that had carved out a niche for itself, a company that was essential to industries like aerospace, power generation, and general industrial markets. These are just a few examples of the unconventional strategy that Berkshire Hathaway employed. They didn't just buy companies, they bought undervalued companies with strong business models. They looked past the surface, past the hype, and saw the real value. Berkshire Hathaway didn't just grow, it exploded, becoming a conglomerate of over 60 companies. But more than that, it became a testament to the power of long-term thinking, of patience, and of seeing value where others see nothing. So, what was the secret to this extraordinary success? The answer lies in the investment principles adopted by Warren Buffett himself. The first principle is value investing. Buffett always emphasized the importance of investing in companies that were undervalued in the market, but possessed a strong intrinsic value. He believed that over time, the market would recognize the true value of these companies, leading to substantial returns. The second principle is investing in what you know. Buffett never ventured into businesses he didn't understand. He always stressed the importance of sticking to one circle of competence to minimize risk and maximize potential returns. The final, and perhaps the most significant principle, is having a long-term perspective. Buffett always looked at investments as buying a piece of a business, not just a stock. This mindset allowed him to weather short-term market fluctuations and focus on the long-term growth potential of his investments. In the words of Buffett himself, our favorite holding period is forever. Over the years, Berkshire Hathaway has become more than just a company. It's a legacy. This financial titan, under the stewardship of Warren Buffett and his partners, has profoundly shaped the world of investing. Berkshire Hathaway's enduring influence is evident in its consistent high performance. With a knack for identifying undervalued companies and a penchant for long-term investment, it has not only survived but thrived, even in the face of economic downturns. This financial behemoth has proven time and again that patience, prudence, and a clear vision can yield remarkable results. But the impact goes beyond numbers. Berkshire Hathaway's success has inspired a new generation of investors, challenging them to think beyond quick gains and focus on sustainable growth. It has redefined what it means to invest and has set a high bar for corporate governance and investor relations. From a small office to a global conglomerate, Berkshire Hathaway's story is a testament to the power of smart investing and a long-term vision.